The Catalyzed for Kids Conference, Canada's annual premier alternative investment conference, is happening in Toronto today. It connects global investment managers with North American institutional investors. Our reporter, Lindsay Biscaya, was there and put the REIT industry in focus with Jeff Olin, co-founder and CEO, Vision Capital.
We're a long-short fund, so we're not here to be bulls for real estate, but we do think the timing is pretty interesting in our space. You have an interest rate setup that's constructive, lower volatility. You have new supply that's fallen off a cliff. You have demand being resilient in the sectors that we're focused on. So we're not focused across the board, but the sectors we're focusing on, we see demand being resilient. And the difference between our asset class and any other asset class is the size of the private property market dwarfs the size of the $2 trillion publicly traded universe, but there's an arbitrage between the two. So when you have these disconnects, you see M&A activity increasing, and we've seen that in our space this year, and we think that continues.
Let's backtrack for our viewers who maybe don't know. What sectors are you focused on? Let's talk about that.
So we look at the entire real estate sector. Today, our focus on the net long side is really four themes. Grocery-anchored, necessity-based retail, we like in Canada and United States. We like seniors housing, retirement homes. We like it in both U.S. and Canada. U.S. is way too expensive relative to Canada. Canada is actually equal, if not higher growth, but way cheaper. We like manufactured housing communities, affordable housing, and we like data centers, which was the subject of our recommendation today. The highest supply and demand imbalance in real estate globally. We like that space as well.
Let's talk about, you're mostly talking about AI data centers or any
Yes.
data centers? AI data centers, are there certain ones you're focusing on? I know you mostly focus in North America, but you've got some overseas as well that you like.
Right, so the public company is the United States, and we're invested in this Singapore-listed REIT, which we talked about this morning, Digital Core REIT. They may be listed in those jurisdictions, but their assets are global. So we talked this morning about Digital Core REIT, listed in Singapore. Their assets are in Osaka, Japan, Los Angeles, Palo Alto, California, Toronto, Frankfurt, and the biggest market is Northern Virginia, which is the biggest and most important data center market globally. And so it's a global phenomena. It's being constrained by power, demand is voracious, and you don't need AI to make this work. There's a lot of question, is AI hype? We don't think AI hype. We're using it in our business. But those that are skeptics about AI, you have cloud storage, you have networking that are growing 40 to 50% over the next 4 years without any AI. And so very powerful demand supply factors driving that. The supply side is being constrained by access to reliable, redundant power. And so, yeah, it's listed here, but it's a global investment.
Of the four kind of main sectors that you mentioned that you focus on, are these AI data centers?
Pardon me,
are these AI data centers? Do they have the most potential in the long term? Do you think? Out of when you're looking at senior real estate,
we love all of our children. We're pretty focused on nurturing them. So the supply and demand fundamentals of seniors housing are compelling. There's been no new supply for 10 years. Everybody understands the aging of the population. You're coming off low occupancy from the pandemic. We see margins increasing. Manufactured housing communities never had 12 months of declining NOI ever, including the global financial crisis. And so, we like all of these sectors. Grocery-anchored shopping centers, no new supply. Demand resilient, no fashion. And while the anchor is the grocer, the tenants, you can't get your haircut online. You can't get your dry cleaning done online. So it's necessity-based retail, and we think all of these sectors are compelling, but arguably data centers today have the most compelling supply and demand fundamentals.
You've also been looking, correct me if I'm wrong, at commercial real estate and some value in commercial real estate. What's that looking like in North America?
Well, commercial, it would include industrial, retail, office, and we're balanced on office. We were short most of the last 17 years on office. We're not short today. Certainly sentiment has improved. We returned to office. New York is really strong. We're constructive on New York. We're not constructive on Toronto. Too much supply. Vacancy rates are too high. You can return to office. Doesn't mean there's going to be incremental demand, although we see some incremental demand. Industrial we like. We think this sector's been really beat up. We like it. We're more balanced in this sector. We've seen a pickup in leasing in the last 2 months in the big box, but the smaller tenants have been resilient. Retail, we're not big on malls, but we like grocery anchor. And so commercial real estate has within it a lot of different components.
Yeah, of course. Okay, so just before we wrap up, as we head into 2026, you mentioned off the top there that rate cuts have kind of helped things. There's potentially more rate cuts to come in both the US and Canada. How are you feeling heading into the next year? Are you feeling optimistic?
We're very constructive. It's not reliant on rate cuts. Rate cuts are maybe...
It might be a factor.
It is a factor, but there's so much obsession in real estate about interest rates. The correlation between the yield on the 10 US bond and REIT prices over 25 years was 0.11. It's de minimis. Supply and demand trumps interest rates, whether rates are going up or down. So yes, they're important. Yes, it's constructive, more so today because there's more stability. Volatility in the 10-year yield has come way down. That typically has been a really good setup for the private property market and the REIT market, where the periods that REITs have outperformed. And so the interest rate setup is constructive, no doubt, but supply and demand is the key.